Here we have the 30-minute price chart for SOUNDHOUND AI Incorporated, stock ticker SOUN. Here we can see that the stock is trading under a fair amount of selling pressure. It's been going on for a few trading sessions now. This really began toward the end of last week, which was a bit surprising when exactly this occurred, because we're really starting to see this downside movement occur during the Friday trading period. The highs are sort of posted during this Friday trading period. And most of the selling pressure that was seen in the market recently occurred during the Thursday trading period. And as we can see here, this really was preceded by a pretty strong upside price movement. This price movement was strong enough that we even saw some price gaps occur in the process. So, the timing for this was a bit strange, but we can start to see that the sell-off here has been fairly dramatic, fairly significant, and we're already starting to give way with some significant Fibonacci price levels. So, if we're going to define this upward trend wave here, we first have to go back to the July 9th trading session with prices trading at lows of roughly $4.03. So if we kind of extend this to this Friday time period here, we can see that the highs came in at $6.45. And this was a significant, very strong upward price movement. We did see some retracements within this upward trend, but there was a price gap here. Prices did need to retrace some of it, and we continued to make new highs in the process. So overall, this was a very strong trending move. And what we're seeing now is a very significant decline in the other direction. So we're seeing a lot of two-way price action here that can be good for sort of for day trading positions and things like that. But proper trading levels need to be identified. Strong support and resistance levels do need to be identified because we can see that if positions are kind of incorrectly structured, it can be possible to give back all trading gains that are found. So currently, we can see that prices quite quickly fell through this 23.6% Fibonacci retracement. That would be this red zone up here, which came in at roughly $5.87. This was a significant price break because, as you can see, the yellow line here coincides with this area. That's the 20-period exponential moving average. So it did take a fair amount of selling pressure to force prices through this level. And then once we did break through this zone, we sort of retested it to the top side, and then prior support levels worked as upcoming resistance levels. It's a fairly common event in the market. After a support level breaks, it'll often start to work as a resistance zone. We can kind of drill in a bit here and see that a bit more closely. We did see a slight break above this red line here, but for the most part, this really was a failure. So this does show that the support zone did start to work as resistance. If we drill out a bit, if we sort of move back a little bit here, we can see that prices attempted to find support at this 38.2% Fibonacci retracement. And again, here we do have a moving average confluence with this level. This rising orange line here and then this orange price zone are coinciding with one another. This rising orange line is the 50-period exponential moving average. And then this orange zone here, sort of zone area, represents the 38.2% Fibonacci retracement. This level was seen at $5.52. And we did see a bit of sideways price action here, and even an attempt to move higher, as we can see. So, this level really did work as support, again, for a small period of time here. We did see a spike upward in prices, but there was an ultimate failure here with a lower high being posted at $6.06 during the July 17 trading session. So, this was sort of the final attempt to kind of hold on to this 38.2% Fibonacci retracement, and then we'd really just start to grind lower here. We finally break through this level. We're now below 2 moving averages, and then this rising purple line breaks as well. It's the 100-period EMA. And the 50% retracement goes at the same time too. So, currently what we're dealing with here is the 618 retracement, the 61.8% Fibonacci retracement. We can kind of zoom in here. That would be this light green line here. And then as we can see, there's an upward sloping blue line here, which is the 200-period EMA, 200-period exponential moving average. Thus far, we have not broken through here yet. It does look, we got a little bit of a green candle here. A couple of, you can consider these to possibly be doji patterns. If we were to see a strong bullish price candle here, you could suggest that this would be a turnaround point here, a turnaround candlestick formation, sort of a morning star candlestick formation. And that would suggest that prices could continue to move to the top side. But we will need to see an upside move here fairly soon. If we do see a downside break here, this will be a fairly significant bearish breakout to the downside, because we will be losing the 200 period exponential moving average, and we will be losing this 618% Fibonacci retracement. In addition to that, the Fibonacci retracement comes in at $4.95, which really means that we would also be losing that psychological level at $5 per share. So, there are a few factors here that need to be watched. One positive point here that can be discussed is the fact that this original price gap that formed on this earlier surge higher, that price gap has now been filled. We can see that when prices declined back to the roughly 510 area, markets were able to fill this price gap. So this isn't really something that we need to be concerned about going forward. All of these orders have now been filled. So, the real question here, it really just comes down to one major level here. And it is this 618 retracement. It's just below the $5 mark. So, what really is going to need to occur here is the market is going to sort of need to overlook the fact that that this psychological level was broken, this $5 handle was broken, and start to enter into some sort of buying action here at these lows. One area that suggests we could start to see this would be the fact that we are starting to roll out of oversold territory in the RSI. That's this purple line down here. We're also sort of on the verge of an upside break of its moving average. So, we can just explain that quickly. The purple line is the relative strength index. It's the momentum indicator. And then this yellow line here is the moving average of that relative strength index. So if we see this purple line cross above the yellow line, that would be a bullish crossover. And it would suggest, it would be a bullish crossover as the RSI is rolling out of oversold territory. So that would be a fairly bullish signal. We do have to remember that we have a fair amount of downside momentum overall, which began, it's really occurred beginning in the 11th of July. It's been so this has been in place for some time here, but we could start to break this. I mean, we've got a chance of breaking this if we're able to successfully roll out of oversold territory here, cross above the moving average, and then hopefully break through this downtrend here. So we are at a fairly critical inflection point. We really do need to see a price break here. If we do see a break below here, we're definitely running a risk of retracing this entire price move, which would mean that we could be in store for a test of the $4 mark. So this is definitely a critical price level that we're trading at currently. Here's the current market update for SOUNDHOUND AI Incorporated, stock ticker SOUN.